With mortgage interest rates close to 8%, more buyers are looking for ways to decrease the cost of buying a home. One way is to find a seller willing to provide seller financing. Seller financing could be a game changer for both sellers and buyers. And so in this video, I will explain how. Before we jump in, don't forget to hit that subscribe button and ring the notification bell so you never miss out on my real estate insights. So now let's get started. All right. So what exactly is seller financing? Well, it's a creative way and flexible way of structuring a real estate deal where the seller takes on the role of the lender. Instead of the buyer securing traditional mortgage from a bank, the buyer enters into an agreement with the seller to make payments over time directly to the seller. Now, you might be wondering, why would a seller opt for this type of arrangement? There are several reasons. First and foremost, it expands the pool of potential buyers. Not everyone can qualify for a mortgage, especially in today's market where rates have drastically increased to close to 8%. Now, by offering seller financing, a seller opens up the possibility of selling to a broader range of buyers. So, seller financing allows the seller to attract more buyers who couldn't secure traditional financing. Also, sellers can often command a higher sales price and earn interest on the money they're financing. It's a win-win. Buyers get a chance at home ownership, and sellers can potentially earn more than they would through a traditional sale. But why would a buyer be interested in seller financing? Well, for starters, it provides an alternative for those who may not qualify for a conventional mortgage due to credit challenges or other reasons like higher interest rates. It's a pathway to ownership for individuals who might otherwise be excluded from the market. Seller financing gives you the opportunity to buy your dream home when traditional lenders might turn you down. Additionally, buyers may find seller financing attractive because it often involves a more streamlined and flexible approval process. There's potential for negotiation on the terms, such as the down payment, interest rates, and repayment schedule, making it a more personalized arrangement. Of course, like any real estate transaction, there are important considerations for both sellers and buyers. It's crucial to have a well-drafted agreement that clearly outlines the terms and conditions of the seller financing arrangement. Consulting with legal and financial professionals is highly recommended to ensure a smooth and secure transaction for all parties involved. If you've enjoyed this video, please give me a thumbs up, subscribe to my channel, leave some comments, and I will see you on the next video.